that's so.
Hi everyone, I am Faradina and today my group and I will be presenting on segmental and interim reporting for Sunway Berhad.
Segmental reporting MFRS 8.
The very birth of Sunway Group in 1974 was founded on the concept of sustainable development. It began with the development of Sunway City, Kuala Lumpur, a tin mining wasteland, to an integrated, smart and sustainable township. Today, Sunway Berhad is one of South Asia's leading conglomerates with core interests in real estate, construction, education, healthcare, retail and hospitality. Sunway Berhad strives towards creating a sustainable future with all 13 business divisions, more than 50 locations worldwide and around 16,000 employees. Sunway Berhad owns 3 public listed companies which are Sunway Berhad, Sunway Construction Group Berhad and Sunway REIT, which form a real estate value chain that exemplifies responsible business practices across the environmental, social and governance framework. What is CODM? Chief of Decision Making or CODM is a function and not necessarily a person. It is likely to vary from entity to entity. It may be the CEO, the Chief Operating Officer, the Senior Management Team or the Board of Directors. The title or titles of the persons identified as CODM is not relevant as long as it is a person responsible for making strategic decisions about the entity's segments. CODM must be responsible for day-to-day operations, responsible for proposing and developing the company's strategy, ensuring executive teams to give appropriate priority to provide reports and make a decision about overall resources and assesses the company's performance. Here, I introduce you to the Chief of Decision Maker of Sunway Berhad, which is Tan Sri Dato' Seri Sir Dr. Jeffrey, the founder and the chairman of Sunway Group. Tan Sri Sir Dr. Jeffrey is the visionary founder and the chairman of Sunway Group, one of Southeast Asia's leading conglomerates with core interests in property, construction, education, healthcare, hospitality and leisure. Next is Evan Chea. Evan Chea is the alternate director to Tan Sri Dato' Seri Sir Dr. Jeffrey and is currently the Group CEO for Digital and Strategic Investment at Sunway Group. He has more than 10 years of experience in general management, investment and technology across various businesses within Sunway Group. The rest of CODM in Sunway Berhad, we have Liu Kok Wing, Group Managing Director of Sunway Construction, Mr. H.C. Chan, CEO of Sunway Malls and Theme Parks, and Dr. Xiao Wei Ken, CEO of Sunway Medical Center. Now, ladies and gentlemen, there are 8 types of segments in Sunway Berhad that I will introduce to you today in this video, which are investment holding, healthcare, quarry, trading and manufacturing, construction, property investment, property development, and others.
Under identifiable reportable segments, the first step is to use quantitative threshold tests or 10% of threshold tests. There are 3 tests that which are revenue basis, profit basis and asset basis. For revenue basis, it is reported from sales to external customers and inter-segment sales is 10% or more of the combined revenues. For profit basis, amount that reported of profit or loss of the segment, either combined profits of all operating segment or combined loss of all segments reporting losses. For asset basis, all assets of combined assets of all operating segment. For our report, we use the revenue basis for the 10% threshold test. The formula is the total revenue divided by total revenue of all operating segments and times by 100%. Below is the calculation using a 10% threshold test to determine which of the operating segments is reportable or non-reportable segments. As we can see, the operating segments that meet the 10% threshold test are property development, 24.18%, property investment, 17.45%, constructions, 56.88%, trading and manufacturing, 19.02%, and others, 15.06%. This segment must be reported as reportable in financial statement. Meanwhile, the operating segments that did not meet the criteria of 10% of threshold are healthcare 0%, quarry 8.36%, and investment holdings 3.96%. Since it does not exceed 10% of threshold requirements, therefore it can aggregate it and disclose under the category of all other segments. After evaluating the quantitative threshold test, next it is required to complete another test, which is a 75% threshold test. For this test, the entity's total external revenue attributed to reportable segments should be at least 75% of its total revenue. However, if the requirement is not met, additional reportable segments should be identified until at least 75% of the entity's total external revenue is included in its reportable segments. This is 75% threshold test. As you can see, I have divided into 4 columns. That is operating segment, external revenue, internal revenue, and total revenue. The formula of the test is total revenue of reportable segments divided by total external revenue of all segments times with 100%. Since the total combination of external revenue of the identified reportable segments exceeds 75%, that is 92.35% of the entity. Therefore, no additional segment should be identified as reportable segments. Under strategic focus on segment reporting, the first one is strengths. Sunway Berhad is developing a safe, equal, and dignified workforce. Also, the company is investing in community inclusivity. Under strength, the company presents in both local and international markets and have strong market leadership positions. It has helped the company to rapidly scale new product successes. For weaknesses, declining the market share of the company with increasing revenues, niche markets, and monopolies. Also, the company have to incur high costs of replacing existing experts. Lastly, opportunities. Sunway Berhad have the opportunities to expand in a developing market across Asia. Also, the company can develop a commercial needs development. Advantages of segment reporting are transparency is displayed in the report, identification of growth opportunities, and improved performance analysis. These advantages of segment reporting are misunderstanding might happen among investors, potential for manipulations, and data consistency issues.
Interim reporting MFRS 134.
Basis of preparation for interim report. There are 2 bases of preparation, which is integral method and discrete method. For integral method, interim report is a fraction of the annual report and annual values will times with the fraction of the reporting period. Meanwhile, for discrete method, interim report is a separate period, which is quarterly, and the reports are prepared on a periodic basis. Sunway Berhad are using discrete method since the company prepared financial interim report quarterly. Sunway Berhad has prepared 8 financial statements using Malaysian Financial Reporting Standard (MFRS) for the year financial ended 31st December 2023. The interim financial report is unaudited and is prepared in accordance with MFRS 134 Interim Financial Reporting and paragraph 9.22 of Bursa Malaysia Securities Berhad listing requirement. The interim financial statement should be read in conjunction with audited financial statement for the year 31st December 2023. Next, accounting policies used in preparing the interim report. Accounting policies and method of computation adopted by Sunway Berhad in this interim financial report are consistent with those adopted in the financial statement for the year ended 31st December 2023. Firstly, MFRS 140 investment properties initially investment measured at cost, including transaction costs. Sunway Berhad adopts fair value model for subsequent measurement, which reflect market condition at the end of reporting period, and changes in fair value are included in the profit or loss. When the fair value of investment property under construction is not reliably determinable, the investment property is measured at cost until the fair value is reliably determinable or construction is complete, whichever comes first. Secondly, MFRS 16 lease. For lessee, as a result of adoption of MFRS 16, the existing requirement to differentiate between finance and operating lease are no longer required under MFRS 117. This standard introduced accounting model requiring the lessee to recognize the right of use of the underlying lease asset and future lease payment liabilities in the statement of financial position. For lessor, MFRS 16 allows the lessor to classify lease as either operating lease or financial lease and to account of these two types of lease differently. For the right of use asset, it contains premise and equipment subsequent to initial recognition. They are ROU asset that measured the cost less any accumulated depreciation, accumulated impairment losses, and adjusted for any remeasurement of lease liabilities. It is also measured at amount equal to the lease liabilities. For lease liabilities, Sunway Berhad measured lease liabilities by increasing the carrying amount to reflect the interest on the lease liabilities, reducing the carrying amount to reflect lease payment made, and remeasuring the carrying amount to reflect any reassessment or lease modification.
Types of interim report. Sunway Berhad prepared a condensed set of financial statements which are an audited condensed consolidated income statements, statement of comprehensive income, statement of financial position, statement of changes in equity, statement of cash flows, and lastly selected explanatory notes. Sunway Berhad prepared its interim report quarterly, which is 4 times a year for every 3 months. The first quarter is from January to March, second quarter April to June, third quarter July to September, and fourth quarter October to December. Now, we will discuss on current period and comparative period for each statement prepared by Sunway Berhad. Firstly, we look at the statement of financial position. For the current interim report, it started 1st January 2023 and ended 31st December 2023, which is for the period of 12 months, while for the comparative period, it started from the 1st January 2022 and ended in 31st January 2022, which is also a period of 12 months. Secondly, statement of profit or loss and other comprehensive income. The current period started from 1st October 2023 and ended on 31st December 2023, which is for a period of 3 months, followed by the cumulative, which started from 1st January 2023 and ended on 31st December 2023, which is for a period of 12 months. In other hand, for the comparative period, it started on 1st October 2022 and ended on 31st December 2022, which for a period of 3 months, followed by the cumulative, which started from 1st January 2022 and ended on 31st December 2022, which is for the period of 12 months. Next, for the statement of changes in equity and also statement of cash flow, it have the same date for both statement, which is for the current interim report. It started on 1st January 2023 and ended 31st December 2023. While for the comparative, it started on 1st January 2022 and ended on 31st January 2022 for both statements.
Next, we will move to the adjustment and solution for the company. There are 2 adjustments made by the Sunway company to be included in the interim report. The first one is inventories. The cost of inventories as at 31st December 2023 is 3,560,998,000 ringgit, while the net realizable value is 3,238,278,000. In determining the value of inventories, we need to choose the lowest between the cost and the net realizable value. Since the net realizable value is lower than the cost inventories, hence, the value of inventories as at 31st December 2023 is 3,238,278,000. Next adjustment is for account receivable. During current year ended 2023, the gross amount of account receivable is 2,790,288,000. However, it is estimated that there will be 10% uncollectible rate for the year. It means that only 90% of the gross amount of account receivable are collectible. Therefore, the net amount of account receivable to be reported is 2,511,241,200 ringgit.
Here is the extract of statement of financial position as at 31st December 2023 for Sunway Berhad before and after the adjustment.
you.